Hello and welcome to another episode of the Mark Moss Show, where we talk about each and every week. We talk about the world changing right before our very eyes. Of course, we talk about it as the pendulum swings. We're maxed out at centralization. The world is moving back to decentralization. We're talking about the decentralized revolution. Of course, we look at it through the lens of three things each and every week: politics, finance, and technology. And today, we are going to dig deep into a giant topic, a long-awaited topic, something everybody's been waiting for. It finally happened, and it covers all three of those. It's politically pushed and motivated, it's technology, and it covers the new financial markets. It's all three of these things, and it is big news. Like I said, it's something that the world has been waiting for. Well, maybe not you, but people that are paying attention to this part of the world have been waiting for, holding their breath, standing on their tippy toes. They couldn't wait. Is it going to be good? Is it going to be bad? Is it a buy the rumor, sell the news event? What am I even talking about? Well, what we're talking about is the Ethereum merge. The Ethereum cryptocurrency, the second largest blockchain by market cap, by market valuation, and they merged. They merged from something and to something. So we're going to talk about that. We're going to talk about what it is that they merged from and to. We're going to talk about the political pressure and political motivation for that to happen and what's going on with that. We're going to dig into the pros and cons. We're going to talk about how a lot of misinformation, of course, when politics are involved, there's a lot of misinformation that comes out. We're going to talk about what this misinformation is. We're going to clear it up, not with opinions, but with actual data and facts, of course, like I always do, bring in the receipts. And then we're going to understand the differences of what happened. They changed their consensus mechanism. What does that even mean? What is a consensus mechanism? What did they change from? Proof of work to proof of stake. What are the differences of those two? What are the trade-offs? What are the pros and cons of each of those? Look, everything in life has a trade-off. That's it. Right? There's no such thing as a free lunch. In order to get more of one thing, you must give up more of another. We're going to dig into that, understanding that, and more. We got a lot to cover, so let's go ahead and just jump right into it. So what we're talking about is Ethereum, like I said, the second largest cryptocurrency by market cap. And, everyone's been talking about for years this merge, it's going to happen. Ethereum runs on a consensus mechanism, just like Bitcoin, something called proof of work. We're going to dig more into what proof of work is. And they've now transitioned their consensus mechanism into proof of stake. Now, you might be going, what the heck is consensus mechanism? And what the heck is proof of work and proof of stake? Don't worry. I'm going to cover all that for you so you understand what the consensus mechanism is. Well, let me hit the consensus mechanism real quick. We won't dig into the differences yet. Consensus mechanism. So, I talk about the decentralized revolution, politics, finance, and technology. The technology being Bitcoin, being cryptocurrencies. Bitcoin runs on a proof of work consensus mechanism. Ethereum has been running on a proof of work consensus mechanism. What does that mean, consensus mechanism? Well, up until now, up until this technological revolution that we have happening right now, we have centralized databases. So, pretty much every website you go to, Twitter runs their database, their centralized database in a building. Facebook, centralized database. Google, centralized database, meaning there's one database at Google headquarters or Amazon headquarters or wherever you want to call it. And there's one database, and it has all the data. And so if a hacker wanted to hack it, like Experian, the Experian database, the credit monitoring database, it's a giant honeypot. If an attacker could get that, they'd get all those users' data, all their credit information, social security information, mother's maiden name, all that data. It's a honeypot, and people have. Experian was hacked. It was the largest hack in data breach, I think, in American history at the time. And so these centralized databases have lots of problems. Like, for example, if Twitter wants to shut you off and delete your entire history, or Facebook, as we see that happening more and more and more. If Amazon doesn't want you to have your listings on there, etc. And so there's a lot of problems with that centralization. So one, censorship can come with centralization. If one person controls that ledger, think about it like a ledger. So a ledger is basically a sheet of paper, or in today's age, it's a database that keeps track of inputs and outputs. Your bank account, there's really no money in that bank account, right? The bank keeps a ledger again. And so a bank has a centralized database. The bank is responsible to keep up their ledger, which is in a database, which is in a computer, and it's centralized. They control it. I have no control over the database. Only the bank, Wells Fargo, Bank of America, et cetera, only they have control of the ledger. And so when I deposit money, they get the hypothetical pen and add money to my ledger. And when I remove money, they cross it out and they remove it out of my ledger. And they keep track of who has what in their account. If I want to transfer money to you, they cross it off of my ledger and they add it to your ledger, right? So all databases, think of them like a ledger. And so whoever controls that ledger has complete control, and then they could manipulate things, right? They could change things. They could just decide to cross off that I have the assets and just give them to them, even if that's not true. So there's a lot of problems that could come from that. Again, like I said, there's this honeypot where people would want to attack it and get it. So the revolution that we have is a decentralized database. So what does that mean? So instead of one database that one entity controls, one ledger, right? Wells Fargo or Facebook or whatever, instead of one, now there's many. There's hundreds of thousands. There's millions of databases, and they're all exact duplicates, all exact copies. And nobody controls it. Not one entity has control over it. And so what has to happen is, in order for a transaction to be valid, if I wanted to transfer money or whatever data I have from my side to your side, instead of one central entity crossing it off on my ledger, adding it to your ledger, instead what has to happen is all the databases out there have to achieve consensus, meaning they all have to agree. The majority has to agree, over 51% has to agree that this transaction is valid. Now, how the heck does that happen? Well, it's a technological advancement, and we're going to dig into the details of that. But right now, that type of consensus has been done one way through what's called proof of work, and Ethereum changed it. We're going to go through the pros and cons, and I'm going to explain what those are, so don't worry. We're going to get to that. But before we dig into that, we're going to talk about what this is really meaning and why the political engine is getting behind this. And so we're going to break it down from a United States viewpoint. We're going to look at it from the WEF, the World Economic Forum viewpoint. Everybody has something to say. So let's start with this article right here. The merge is a step in the right direction to address crypto's energy problem. Okay. So everybody's excited. Everybody's praising Ethereum's move because it uses less energy. It says actually to address crypto's energy usage. So all of a sudden now using energy is a problem. That's pretty interesting. The whole world runs off of energy. You're able to listen to me right now because of energy. Whether your computer's plugged into the wall or it's running off your car engine's battery or wherever you're at, wherever you're listening to this, you have electricity, you have energy. The whole world runs off electricity, but now it's okay to use energy for these use cases, but it's not okay to use energy for these use cases. It's pretty weird. We're going to dig into that. So it says here, the CFTC, Commodities Future Exchange, they manage, they're responsible for regulating commodities in the United States. The chair said that Ethereum blockchain transition to proof of stake, despite reducing energy usage by more than 99%, may not go far enough. So they've reduced energy usage by 99%, and that may not be enough, they said. He hinted that legislation would likely still be needed to address the problem. Legislation. So we need more laws. If you give us more control, don't worry, we can fix everything, right? That's what he's basically saying. I want to dig more into that in a minute. You're listening to The Mark Moss Show if you're just tuning in. Thank you. The Mark Moss Show. We talk about the decentralized revolution, the way the world is changing right before our very eyes through the lens of politics, finance, and technology. And today we're digging deep into all three of those with this giant story. And I'm going to tell you everything you need to know about this, what the pros and cons are, what this means for you, what it means for the climate, for the energy crisis, all these other things. We've got a lot to cover this hour. Back to what Ross Burnham said. He's the chair of the United States Commodities Future Trading Commission. The CFTC, they're the ones that regulate cryptocurrencies because they are commodities, except for proof-of-stake cryptocurrencies, which are supposedly securities, which would actually fall under Gary Gensler and the SEC. Anyway, let's not dig into that. So according to Ross Burnham, he says that the Ethereum blockchain's transition from proof-of-stake to or to proof of stake may help reduce crypto's energy usage, but he hinted that legislation would likely still be needed to address the problem. We still need more power and control. It's always the answer, right? The government's answer to everything is just give us more power and control. If you give us the power and control, we can fix everything, right? Yeah. So speaking at a Thursday meeting, Benham addressed a question from Minnesota Senator Amy Klobuchar, who brought up the environmental impact of the, quote, significant energy. Significant. Oh, it's so significant. The CFTC chair said that the crypto bill currently being considered, the new laws, again, if we just give us more power, the new bill being considered by lawmakers. So think about that term, lawmakers. That's what they're called. They're called lawmakers. So what do? Oh, they make laws. So their whole role, their whole job is to sit there all day and make new laws. And we got lots of them. We got hundreds of them. We have thousands. We have tens of thousands if you want to include the administrative state that's on top of that. And so considered by lawmakers whose job it is to do what? Make laws. If they're not making laws, then they're not doing a good job. So let's just keep making laws. Okay. Anyway, lawmakers would require a report. So, more work. Now businesses have to do more work. They have to fill out more paperwork, which increase their costs. They have to hire people to do that. If businesses' costs go up, then what happens? That's right. You as a consumer pay more. So it would require a report on energy usage that could lead to future policy discussions or lead to more laws and, quote, incentives to move away from carbon-intensive energy sources. Remember that. We're going to come back to that, okay? Move away from carbon-intensive energy sources, all right? But put a pin in that. We're going to come back to that because now we're talking about the environment, right? That's what they're talking about. They're talking about the energy. It's too much energy. It's significant energy is what they said, quote, significant energy. And we need to have more laws. We need more power. We need more control to move away from carbon-intensive energy sources. So they're saying that we need to get away from this because it's carbon-intensive and it just uses too much energy. Well, what's too much energy? I'd like someone to answer that question. That's always the problem with government is, hey, this speech is okay, but this type of speech is not okay. Well, who draws that line? And where is that line? And like I said, who draws it? And are they able to just move that line? We have hate speech. Well, who defines what hate speech is? Who defines it? And I get it. Like, that's a ridiculous argument I'm going to make, so you're going to hate me. But my daughter hates bananas. So if we talk about bananas, is that hate speech? And I know that's ridiculous, but that's the point. Who defines what hate speech is? Who defines what a good use or bad use of energy is? Who defines? Well, of course, they want to be the arbiter of truth, but that line is always moving. So we want to move away from carbon-intensive energy sources. Okay, so let's keep digging into this. So it's all about the climate. So environmental groups now have pledged to spend another, not the first, another $1 million on ads for Bitcoin code to change. So the, quote, change the code, not the climate campaign is upping its efforts following Ethereum's switch to proof of stake. So Ethereum has moved from proof of work to proof of stake. Lawmakers are saying, hey, that's good. You reduced your energy use by 99%, but you should reduce it even more. It's not enough. We probably need new laws. And at the same time, we have this group of people now spending millions of dollars to try to get Bitcoin to change its code from proof of work to proof of stake. Don't worry, we're going to cover what proof of stake and proof of work are, what those mean, the pros and cons of each. Don't worry, we're going to get into that. But I want to start here. So environmental groups pledged to spend another $1 million on online ads to pressure the Bitcoin community to change the network's code. It will never happen. It will never happen. And you're going to understand why when I talk about the differences of proof of work and proof of stake. Again, we started with the ledger, a centralized database. Who controls the database, who controls the ledger, can change it any way they want. I have no say in how Facebook or Experian or Wells Fargo runs their database, what they add, what they don't. I have no say. If they want to change their software, the bank, whatever software banks use, like Cobalt software, they've been using it for decades. If they want to update their software to a different type of software, I have no say in that. if Facebook, built their database on, I don't know, one type of code, JavaScript, I don't know, and now they want to change it to Python code or whatever, I have no say in that. You don't have any say in that. It's up to them, right? But that's a central entity, right? The difference is that decentralized is that nobody controls the database. Nobody has control or power. So with Bitcoin being decentralized, if nobody has control of it, who's going to change the code? And if you said, well, there's nobody to change the code, then you would be right. Only a central entity can decide to do that. A decentralized, so they're going to have to get the hundreds of millions of Bitcoin users to all come together and achieve 51% of that vote, and somehow that code is going to be changed. Yeah, right. Okay, don't worry, we're gonna get more into that in a minute. So they're wasting their money. They're burning millions of dollars. Wouldn't they be better off just using those millions of dollars for any number of other things, like feeding the starving children in Africa or coming up with new energy sources or something like that? So after the Ethereum blockchain, which is the world's second largest cryptocurrency, as I said, changes consensus mechanism from proof of work to proof of stake, POW or POS, we'll abbreviate that, doing away with the need for energy-intensive computing power. Now it says Ethereum's energy-efficient merge leaves Bitcoin as the lone cryptocurrency climate polluter. So now that's what they're saying with this millions of dollars misinformation campaign. It leaves Bitcoin as the lone cryptocurrency climate polluter. Now let me just be clear here. This is straight up propaganda and it's misinformation. Now this comes from Greenpeace, the company that sells diesel burning boats all over the ocean to, go after all types of people. Oh, and of course, Ripple co-founder Chris Larsen. So Ripple is, of course, a proof of stake blockchain that's trying to get in bed with the government. So of course, they're going to attack their competitors. Of course, why wouldn't they? But what I want to talk about here is we're talking about this leading up to this pressure of the government, these pressure of these activists, and we need to change the consensus mechanism because it uses too much energy. Whatever too much energy means. Too much energy means something different to me than it does to you. So that's the point. It's being attacked by their competitors, and it's being attacked with misinformation. And I know that's a word that's thrown around a lot, but I am going to actually tell you the data behind this misinformation. So to their point, they said here, this is their quote, the Environmental Working Group, EWG. They said they're spending millions of dollars to lobby this. They said Ethereum's energy-efficient merge leaves Bitcoin as the lone cryptocurrency climate polluter, end quote. So first of all, Bitcoin and the proof-of-work consensus and the computers that run to power that do not emit carbon. So we'll just say that right off the bat. The computers running do not emit any carbon. And that's a whole nother conversation about carbon anyway, but I'm not going to get into that right now. So I'll just repeat that one more time for the people in the back. The mining computers, the Bitcoin, the proof-of-work computers running do not emit carbon. So they call it the climate polluters. Okay, well, I don't know how. They don't emit anything. Now let's dig into some of the data. All right. What does the data actually say? The data says one of the proponents of this, or one of the people pushing back, is Michael Saylor. He's a big outspoken proponent. He says that POW, proof of work Bitcoin mining, isn't, or they say that it's a polluter. He says that it's the cleanest industrial use of electricity and it's improving its energy efficiency at the fastest rate across any major industry. As a matter of fact, the data shows 59.5%, called 60%. 60% of the energy for Bitcoin mining comes from sustainable sources. And the energy efficiency has improved 46% year over year. So back to this quote here, this misinformation. It's the lone climate polluter. Those are their words, climate polluter. Well, again, the computers do not emit any carbon. There's no pollution coming from the computers. And the energy itself, 60% of the energy comes from renewable sources. So how is it polluting again? Sure like to know. Bitcoin is far less energy intensive than Google, Netflix, Facebook, YouTube. It uses less energy than your clothes dryers or your dishwashers. Now, do you need clothes dryers? I mean, can't you just hang up your clothes in the back on a line? Do you need a dishwasher? I mean, can't you just wash them by hand and let them dry on the countertop? Do you need Facebook or Google or YouTube? Do you need those? Because those aren't a waste of energy, but somehow Bitcoin that uses way less energy than any of those, and it's actually more energy efficient than any of those, is a waste. And so that's what I'm talking about, right? Who's to say what a waste is? One man's trash is another man's treasure. I might consider your time spent watching YouTube videos or playing on TikTok a waste of time or a waste of energy, but you might not. You might like that. I get my education off of YouTube. It's not a waste of time. Now you watch, stupid videos, so it's a waste of your time. It's not a waste of energy because I got something constructed out of it. Like, who's to say? Who's to say? But it's far less energy intensive than Google, Netflix, Facebook, YouTube. It's 1 to 2 orders of magnitude less energy intensive than the traditional 20th century industries like airlines, logistics, retail, hospitality, and agriculture. 2 orders of magnitude less than any of those. He says it's an attempt to focus negative attention on proof-of-work mining and distracts authorities from the inconvenient truth that proof-of-stake crypto assets are generally unregistered securities trading on unregulated exchanges. He says that Bitcoin mining can bring a clean, profitable, and modern industry that generates hard currency to remote locations in the developing world. So let's dig into that. So this is some opinion. Let me give you the data. Let's look at the data. Let's look at the facts. Okay, now this report comes from the Global Bitcoin Mining Data Review, quarter 2. Okay, so you can look this up if you want to look at that Global Bitcoin Mining Data Review. And they went to all the publicly traded companies to get this data and other ones that wanted to voluntarily submit it. And let's look at the data here. So global Bitcoin mining energy use is negligible. So we just talked about that, right? So it uses Bitcoin mining energy use is 0.117% compared to the world's energy. 0.11%. Negligible. It's a rounding error. Globally, Bitcoin mining has the highest level of sustainable energy. The highest. More renewable energy is used for Bitcoin mining than any other type of energy source. It's 56%. It's actually now 59.5%. It's almost 60% of all the energy for Bitcoin mining is sustainable. But here's the big piece. Write this number down. This is the one you want to remember. Okay, so it's a waste of energy, they say, right? Well, who's to say what a waste is? I already made that case, right? But what would actually be a waste? I can't say anybody's use of anything is a waste, right? You sitting there doing nothing for 60 minutes is a complete waste of your time. But maybe you were doing meditation, and that's actually super important to you, right? Who am I to say what's a waste? But what a waste is, if I make a bunch of food and nobody eats it, and then I have to throw it away, well, I guess you could say that was a waste. I created the food, and nobody ate it. So I could have kept the food in the freezer or in the refrigerator, and we could have used it later when people would eat it, but I made it now, nobody ate it, so that food was wasted. It was created, and nobody consumed it, right? So I think we could agree on that. If like in China, they've built all these buildings and skyscrapers and nobody uses them, and now they're blowing them up and tearing them down. That was a waste because they built them and they didn't get used, and now they're tearing them back down. That was a waste. So let's think about that for a minute. So in the world, the total energy generated worldwide is 162,000 terawatt hash. I don't know exactly what that means, but 162,000, okay? Almost 162,000 terawatt hash. There's energy that's lost to inefficiencies, and that's about 50,000 terawatt hash. And all the energy in the entire world that's being used for Bitcoin is 189. So out of the 162,000, it uses 189. But that doesn't tell the whole story. Here's the part that I want to talk about, the wasted part. So what happens is In California, you have the highest energy prices in the world. Why? Because there's more demand than there is supply, so it pushes the prices up very high. In some parts of the world, so in California, in the summer, at the peak, it's a tiered pricing structure. At the top, you pay over 40 cents per kilowatt hour, 40 cents. But in some parts of the world, energy is 4 cents. Or 3 cents. Now, why the heck would it be 3 cents somewhere when it's 40 cents in California? The reason why is because there's more energy being created than people are using. So, for example, there's places in the world where they just built this new energy plant, but there's nobody around it yet. Eventually, towns will move in and more businesses will set up, and eventually they'll use it all. But right now, it's not being used. So they're actually creating energy that nobody is using, and it's going to waste, just like me making the food that nobody ate and it went to waste. So Bitcoin can only use the cheapest energy. It can't compete in California at 40 cents a watt. It has to go where there's energy nobody's using. It can only work off the cheapest energy, like 3 or 4 cent power. If energy in California is 40 cents, how can they find 3 or 4 cent power? Well, it's because there's power being created that nobody's using. So the Bitcoin mining, the proof of work, uses 0.4% of the world's wasted energy. Bitcoin doesn't compete for energy that people need. It can't afford to. It can only use energy that's being created and thrown away. It can only use the food that was cooked and nobody ate it and it went to the trash can. Bitcoin only can use the energy that's being wasted. It uses 0.4% of the energy that's being wasted. Does that make sense? So, in addition, it's also finding energy that's not even being used. So, for example, all throughout North America, we have these oil rigs and natural gas comes out of the ground, and they haven't been capturing the natural gas. They've been either flaring it into the ecosystem or flaring it, which is lighting it on fire, or just venting it into the ecosystem. And the problem is that these are out in the middle of nowhere. They're so far in the middle of nowhere, they call it stranded. There's no way to get it and capture it and take it to the pipeline. It would cost way too much money to build pipelines out there. So that's wasted. That's energy that's not being collected, and it's literally just being vented into the ecosystem or flared off. It's completely wasted. Nobody's using it. But Bitcoin miners will drive out there, drop a container right there, and use that energy that's being wasted. Do you understand what's happening here? So it's not a waste. It's already being created. Now, let's dig into the difference of proof of stake versus proof of work. So Bitcoin uses proof of work. Ethereum has been using proof of work, and this week they switched over to proof of stake. Let's talk about that. So first of all, I said this is political. We already talked about what the CFTC said. They want new laws. They want more power to regulate it. Even though Ethereum has reduced their energy usage by 99%, it's not enough. They wanted to reduce even more. What are they even talking about? But this might be why the World Economic Forum is completely behind the merge. The WEF currently has this plastered all over its homepage, celebrating the merge, and they say it's, quote, a sea change towards sustainability among cryptocurrencies. All right, WEF is on board. Not everything, but most things the WEF is for, I'm probably not for, because I know what their goal is by 2030. It's on their website. Klaus Schwab has written the books. I don't like to repeat them because I'll sound crazy, but the goal is by 2030 you'll own nothing and be happy. I don't like that goal. That's not what I want for my life or for my kids. And so pretty much anything that they're doing is leading to their goal, and I don't want that goal. So then I don't want to go along with things they like this. They're applauding this. And the problem is that we're going to talk about the difference. So moving from to proof of stake, Ethereum has now jeopardized its security and decentralization. So remember, there's a technological revolution happening here. The technological revolution, the new invention that we have, is decentralization. That's it, decentralization, which Bitcoin has solved. Ethereum was kind of there a little bit. I'm not going to go into the details of it before with proof of work, but now by going to proof of stake, now it's jeopardized its security and decentralization. Let's talk about that for a second. All right, so proof of work basically means there's millions of computers using electricity to apply processing power to process transactions. Now, that seems like a waste of energy. Why do we need millions of machines doing that? But it's what keeps the system decentralized. Remember, we don't want just one database that anybody can change. They're the arbiter of truth. We want a decentralized system that nobody can control. Work is the arbiter of truth. The pyramids are proof of work. It's the arbiter of truth. Everyone can look at the pyramids and know that it's true that work went into building that. All right. If you're really strong and you've built up big muscles, that's the arbiter of truth. We know you've put time into the gym to build that up. All right. There's no central authority that decides what constitutes a valid transaction. If I want to do a transaction from me to you, there's no central authority that decides that. Like at the bank, they switched my ledger from me to you. But in a decentralized one, the longest blockchain that's verified is recognized as the truth by the rest of the network. The longest blockchain is the one with the most work put into it, and it meets the consensus criteria that the node networks check. All right. The more energy that Bitcoin's network uses, the more computers that are on the network, the more energy being used, the more secure it is against any type of attacks. All right. Now, proof of stake is so if proof of work is a system where miners compete with electricity and processing power to build the longest blockchain, which becomes the accepted blockchain, that's proof of work, then it's connected to real world natural resources. If I spend all this money on my equipment and all this money on electricity and I try to maliciously work against the network, I'm going to lose my money. So I'm incentivized to be a good actor. It's connected to real world natural resources, electricity. Proof of stake is where holders of the cryptocurrency lock it up. They quote unquote stake their coins. And then those staked coins, those locked up coins are then used to vote on valid blockchain. And then they get rewarded with more coins for successfully creating new blocks. So I stake them, and now I can earn new coins back for the existing coins I have. Instead of having to commit electricity and processing power to create new blocks, now they're just committing their stake of coins. So there's no work being done. They didn't have to buy anything. They don't have to spend anything. All they're doing is staking their coins. Proof of work is simple, right? Like I said, you don't need to punish bad miners. Their punishment is that they would spend all that money on the equipment and the electricity, and if the blocks weren't valid, they would lose that money, right? They self-inflict their own wounds. So it never happens. But proof of stake's complex. Because there's no connection to real-world resources, there's no money there, there's no way to make sure stakers aren't doing something maliciously. On top of it, proof of stake is prone to centralization. The more coins you have, the more voting power you have. Those with the most coins get the most votes, sort of like a political system. So Ethereum, 70% of the tokens, the coins on Ethereum were pre-mined. The founders gave them to themselves. So who gets to say how the network changes? Oh, those with the most votes. Who has the most votes? Those with the most coins. Who has the most coins? Oh yeah, the ones that gave it to them when they invented it. As a matter of fact, 73% of the Ethereum staked is held by known providers, with 4 entities controlling an astounding 60% of the total Ethereum staked. 4 entities control this: Lido, Coinbase, Kraken, and Binance. So this makes it very centralized, which means they could get together and vote to change anything, which is why probably the entities like the WEF like it. With enough power, with enough exertion, they can get the network to censor transactions or change the software or change what they want. Proof of work is something that cannot be controlled. It's not about the energy being used. It's not about the climate. It's about having control over that. Hopefully that makes sense to you. Big news. It's changing fast. I'm trying to help you stay on top of it. You're listening to The Mark Moss Show. Of course, we're talking about the decentralized revolution. We're talking about, just finished about the Ethereum merge that happened this week. If you missed it, check it out on the podcast. Just search Mark Moss on any of your podcast players and you'll find it. Or check me out on YouTube. Just search Market Disruptors. You'll find them there as well. You can watch me on video. But that's what I got. That's the Ethereum merge. Hopefully it makes sense. Thanks for listening.
Since you've stayed to the end, I know you like this video, which means you're probably gonna really like this video right here and this video right here.